we'll go ahead and get started. Today, guys, we're going to go over just the basics of candlesticks, kind of what they are, what makes up a candlestick, kind of what they mean, and we'll go over some common patterns. Again, like always, this is going to be recorded, so if you guys want to go back and look at it, I have some graphics up on my screen. You can follow along, in the recording as I talk about it. This will be posted on YouTube, so jumping right into it. What is a candlestick? A candlestick is, what we look at every day when we're trading our charts. The chart is full of candlesticks on some time frame or another. Usually we use, the 1 minute and the 5 minute. So on my screen, you'll see two graphics. One's a bullish candlestick and one's a bearish candlestick. They are made up of a body and of a wick. If you do look at this, you'll see on my screen, one's traditional, one's modern. The only difference between that is the color. Traditional, back in the day, candlesticks used to be white and black. Today, we see them as green and red. You can change that if you want to. So making up a candlestick. So there's a body, which is the filled in portion of the candlestick. The open and the close points make up the body, which again is filled with the color. There's also wicks to the high side and the low side. So any wick above in this case, a bullish candlestick we'll talk about first. Any wick above the close of that candlestick is the high. Any wick below is the low. So if you're looking at a candlestick, the full body of it, if there's a wick above it, the price went above, obviously, that body. And if there's a wick below it, the price obviously went below that body. And then the body of the candle itself closed, which again is filled with color. Same thing with the bearish candlesticks. So it's the same exact makeup. You have the body, which is the open and the close, filled with color, a wick, above and below. So a bullish candlestick, which is a green candlestick, the bottom of the body is where it opened. So whatever time frame you're looking at, as soon as that time frame starts, if it's a 1 minute, every minute, a candle is going to open. Let's say it's going to be a bullish candle. The bottom of that body is going to start that candlestick. And then as it moves up in those 60 seconds, the body of the candlestick is formed. And again, we're talking about a bullish candlestick. The top of that candlestick is where it closed. So the body of a bullish candlestick, which is green, is going to open from the bottom and close at the top. And then obviously you'll have your high and low wicks. A bearish candlestick is opposite. So again, every time frame that starts, if it's on the 1 minute, when a new minute starts, if it's a red candle, the candle's going to open at the top of the body, and then it's going to, again, if it's going to be a red candle, move to the downside as those 60 seconds pass, and the bottom of the bearish, which is red candlestick, is going to be the close. So a bullish opens bottom, closes top. A bearish opens top, closes bottom. Again, the wicks, top and bottom, are the same for both. That's just price action in the body of that, in this case, 1 minute candle. So that's the basic makeup of a candlestick. That's kind of how they work, kind of what you're looking at. This is very basic, but this may help. Let's take a look at a bullish and gold. Again, we just talked about that bottom big one, which is just a makeup of the candlestick. So here we're talking about a bullish engulfing candle. So if you hear Jason or anyone as we trade say anything about a bullish or a bearish engulfing candle, this graphic is what we're looking at. So again, this bearish candle, we're going to say it opened at $5 and closed at $4.50. We'll say, the wick above was $5.25 and the wick below was $4.25. So that candle took place and is complete. Now the new minute starts, which is we're going to go over to the green candle. And a bullish engulfing candle means that the length of the candle itself, the full body, engulfs the entire body of the red candle. So a bullish engulfing candle is where the bullish candle closes above the previous candle's open and lower than the previous candle's close. So just try to think of it as this. if we're saying a bullish engulfing candle, we're saying that that green candle basically engulfed the entirety of that previous candle. In this case would be that red candle. So this would be, a bullish sign. The red candle opened, it closed, that price action took place, the next interval opens for whatever time frame you're looking at, and buyers really step in and they completely engulf the entire move of that red candle. And that is a bullish engulfing candle. The bullish candle opens and the bullish candle closes. So it opens at the bottom, closes at the top, has a wick up and down. It's the same thing as the bullish candle, but in this case, the sellers took over. So now this is a bearish engulfing candle. So the red candle opens above the previous close of the green candle, and then the length, the totality of the body completely engulfed that green candle. So, the price action took place with that green candle. The next interval starts of that time frame, and then sellers really take over and they completely engulf the entire move of that red candle. This is broken all the way down into a single candle on, again, whatever time frame you're trading with. So a lot of times we'll be trading and you'll see the chart, whether it's a 1 minute or 5 minute, and we might even use these terms for a couple candles. For instance, let's say this candle happens, this green one. I'm still looking at the bearish engulfing, so the big red one. If you want to follow along on the graphic, let's say that this green candle opens here and closes here. And then let's say the next interval takes place before this red candle happens, and another, let's say, little candle opens. So it's going to open where this one closed. So it's going to open green, and let's say it's only going to move like 10 cents. So we can have this full green candle, and then next to it, we can have another little green candle. And then this entire red candle also happens. So it's still the same exact scenario. We're just talking about more than one candle now. So there was 2 green candles. And then in the third interval, we'll call it the minute, the third minute, this bearish engulfing candle ate this entire move of both of these candles. So again, this is broken all the way down into a single candle, but you can use this as full moves on a chart. So it can be, 1, 2, 3 candles. And then the next move, you'll see a lot of times it's usually to the downside. A stock will have a decent move up, and a lot of times this will happen pre-market. This is part of what makes a good or bad setup. We want to see a strong move to the upside and tight consolidation. We don't want to see a big move or even a little move and then it completely eaten by the other side, whether it's buyers or sellers, whether you're long or short. So that's what a bullish and bearish engulfing candle is. That's the makeup of a candlestick and kind of how they work. Does anyone have any questions on candlesticks or anything we just talked about? Okay, so here's a good example on a chart. So if you guys have your Thinkorswim or whatever you're looking at, I'm looking at Tesla, and we're going to look at an entire move rather than just a candlestick. So if I'm looking at Tesla and I'm looking starting at 945. So this body of this red candle opened at 890, basically 97. And this went all the way down to 877.62. And you can look at this entire move. That's a pretty big move to the downside. But we're going to start with this one candle right here. You'll see that this then triggered buyers really stepping in. So this opened right here, closed right here. It immediately opened higher than the close of this candle. And then we're talking two 1 minute candles here, completely ate that entire move of that candle and almost doubled it. So this is a really simple example, and you'll obviously apply this to whatever chart you're looking at, but these 2 candles completely ate that entire move. So in the very, very short term, we're talking a minute here, this would be a potential sign of buyers stepping in. Obviously there's many other variables to look at, but that's just kind of one example. And then let's try to look for another move. Okay, so this is a good example here too. So I'm looking at Facebook, which is Meta, META. This is kind of where I was talking about the 2 candles. So these two candles happen. These are two green candles. I'm looking at 1010 on the 5-minute chart of Meta. So this starts basically 181.68. This goes all the way up to 183.10. This is two 5-minute candles. And in this one 5-minute candle, it basically ate that entire move in one candle. So not 100%. That's not a full bearish engulfing candle because, there's just a little bit of room. If you count this candle, then it ate the entire move. So those are just a couple simple little examples of the bearish and bullish engulfing candles and kind of what to look for. And again, there's many other scenarios and things that go into, what makes a good trade or a good move, or, whether we decide we don't want to trade that anymore or we need to stop out, things like that. But every time we, open up our chart, every time we trade, we're looking at charts, we're looking at candlesticks. So to understand some of this stuff is pretty key. Candlesticks are really simple. Yeah, I agree. A lot of the stuff that we're going to go over is more like simple and basic, but it's stuff that we want to touch on and make sure everyone understands and answer any questions that anybody might have about them. Yeah, so pretty basic with candlesticks. Again, the body of the candle is the color. The wick above it and below it is just that. Green candles, which are bullish candles, open at the bottom, close at the top. Bearish candles, which are red, open at the top, close at the bottom. Any candlestick patterns you use other than engulfing? Yeah, just kind of looking at charts and seeing stuff. Again, if we look at Meta, Facebook, if we look at the 5-minute chart, we'll look at 935, that 5-minute candle. It's not a full doji because there is a little bit body of it. I don't think it's high enough to call that a hammer candle, but a doji candle, for those of you who don't know, is usually a candle with little to no body. So the entire candle basically is just wicks, which means whether it's red or green, it opened at this price, wicked up and down, and then basically closed at the same exact price. So if you hear anyone talk about a doji candle, that's basically what it is. So this one right here, again, I don't think this is high enough or big enough to call this a hammer candle. The 955-minute candle, that's basically a doji candle when a candlestick does not, it has little to no body. And then if we talk about hammer candles, let's see. So this one right here, pre-market on Meta, 905. This candle right here, you see, so red candles open at the top, close at the bottom, right? So this candle opened right here, wicked all the way down here, and then closed up here. So the body of the candle on Meta is, not even 20 cents. And then there's a wick all the way down here. So if we're talking about a hammer candle, whether it's, we say hammer or inverted hammer, obviously it's going to be either at the top or the bottom. We'll talk about hammer candles. So in this case, the price opened up here. It opened here, closed there, and then this entire wick. You can obviously look at other things, and you should, but this would be kind of a signal of, okay, sellers might be getting exhausted. This dip right here got ate up pretty good by buyers, which brought this candle all the way back up. And then you can see, so we'll say 10 minutes later, this move didn't even fill these wicks, and then basically a big move to the upside. So again, don't use this simple little topic of a hammer candle to trade. A lot more goes into it, but you can see that because this is a hammer candle, it wicked all the way down here, came up, buyers stepped in, bought this dip, it dipped a little more, and then this is just a sign that potentially sellers are getting exhausted, buyers are stepping in, which you saw here they did, and a big move to the upside. So we went over just basic candlesticks. We went over bullish and bearish engulfing candles. We went over what a doji candle is, and we just went over hammer candles. So again, these are broken down all the way to a single candle. Whether you're trading on a 1 minute or a 1 hour chart, what we just talked about stands true for every chart. the candlestick makeup, what they are, how they work, things like that. And you can apply this to whatever chart you're looking at. Let me take a look. Tesla, 5-minute chart, 10:05. Bear candle closed 878.20, but the next candle opened. There's just a small example of this. Seeing divergence between the close of one and the open is something different than a close. Yeah, so I see what you're saying. So at 10:05, this candle closed right here at 877.11 basically, and I believe your question is, how does the next candle not open exactly where the previous candle closed? So normally you'll see it at or basically around it, but a lot of times if you see a discrepancy, which in this case we see that this candle closed, I'm not zoomed in all the way, so these might not be exact pennies, but we'll just call it 877.11, and then this candle opens at 877.45. So it's like, where did those 30-40 cents go? That's simply orders being filled, whether more to the up or more to the down. In this case, more to the up, because the candle opened higher than the previous close. That's just kind of orders getting filled in those micro seconds, if you will, that TOS doesn't capture, because obviously we see things change by the second, but there are a lot of time in a second if you break it all the way down. So nothing in that other than just orders being filled before you see that new candlestick start on your chart. Oh, AK stocks, no problem at all. You're good. Feel free to ask any questions. So those are candlesticks. Again, pretty basic. Does anyone have any questions about anything else other than candlesticks? Anything trading wise? Anything you guys were thinking about this week, or anything you need help on? These are open forums, so after our kind of topic conversation, we can talk about other things if you guys have questions. That's what I'm here for. What is shorting? So shorting, in simple terms, is just the opposite of longing. So if you long a stock, you buy shares of that stock in hopes it's going to go up, and then you will sell those shares higher and you make the difference. Shorting is the same thing. Shorting, instead of clicking the buy button, you're going to click the sell button. And in this case, you're borrowing those shares from the brokerage, and in hopes that it goes down. And if it does, you're going to sell those shares back to them at a lower price, hopefully, and then you get to keep the difference. So shorting is just betting that the stock's going to go down, rather than longing it, which is betting the stock's going to go up. When you long it, you buy it, and when you short it, you sell it. So when you short a stock, you don't have any shares of it yet, and you hit the sell button, and you're borrowing those shares in hopes it goes lower. All right, does anyone have any other questions they would like to go over today? So you can make profit off of selling what you don't have. Yes, absolutely. So a lot of people make a lot of their money shorting stocks. A lot of traders are short bias traders. If you hear someone say that, they are more into shorting stuff than they are to longing stuff. So they'd rather short stuff than buy stuff, which just means that instead of buying shares, basically you're selling them and borrowing them, and then hoping to buy them back at a lower price, and you get to keep the difference. Usually with, obviously, some type of, whether it's hard to borrow or anything like that, fee. There are easy to borrow stocks, but obviously just kind of like a bank, when you take out a loan, they kind of have a fee, if you will, in interest to borrowing that money. So when you short a stock, a lot of times you're going to pay a small fee because they are allowing you to borrow those shares from them. Yeah, that's a good graphic. Again, these will differ a little bit based on time frame, but as you can see, there's a lot of different candlestick patterns. We don't go over a ton of patterns themselves because we mainly trade small cap, high momentum stocks, which don't really kind of set up the same way as a lot of other stuff. And then obviously we're in and out of trades super fast. So you can see inverse head and shoulders is obviously the opposite of a head and shoulders. Head and shoulders, you think it's going to go down. And inverse head and shoulders, it should go up. You'll have things like bull flags and bear flags. Obviously, the bull flag price is going to go down and then shoot up. Bullish opposite, it's kind of going up and then shooting down. Of any of those stocks there, I'm sorry, any of those patterns, I would say the ascending triangle is probably the main one I use. Double bottoms you can kind of use for, supports, and then double tops resistance, things like that. So yeah, absolutely. If you are on Thinkorswim, Foxtello, or whatever brokerage you're using, and you do want to get into more shorting, if you aren't already, I would recommend enrolling in the Hard to Borrow program, the HTB program, and you can just message your broker and get enrolled in that. All right, guys, like always, I appreciate you guys showing up and listening and hopefully soaking in some knowledge and asking your questions. Hopefully, the market continues to turn around. Last week was obviously amazing. This week, a little less opportunity, so just try to be careful out there. Trade your plans, look for good setups, keep your winning ratios, and stick to those plans. We're just going to continue to pour into you guys and into Profit Chasers as a whole, continuing to try to better the Discord and the community and the resources. So keep showing up. I appreciate all you guys. I value my time very much, and I know you do too. So thank you for showing up. You guys are doing great. Just keep showing up every day. Keep looking at those charts. Keep asking questions, and just keep learning. We're going to keep plugging away at it. If you have any questions, feel free to DM me, Dagan, Noah, Jason, and we'll help you guys out. Other than that, that's all I have for the lesson today. Again, I appreciate you guys, and have a good day.